Good afternoon, everyone. Welcome to Hit the Bid here on October 26th. This is Ty Robbie here through Week 43 Market Watch. Today we're going to run through our charts and see what happened across the markets over the last week and see what opportunities wait for us as we move into Week 43. So let's jump right in here and get started. First up, we got our December live cattle on the board. We did see cattle markets taking heavy fire last week as we continue to see more comments coming from the government regarding beef prices and their response to them. This market really not liking what it was hearing here, and we saw a hearing over the last week, and we did see some pretty heavy selling pressure to finish out last week. Brief glimmers of hope with Monday and Tuesday's action showing decent support above that prior Friday's low. However, Wednesday saw that selling pressure really kick in, breaching that bear pivot down there from last week at 241.40, and really could never get any traction rolling back above it throughout Thursday and Friday's session. This market finishing Thursday down there below that bear pivot, and the bears really kicking into gear here, and finishing Friday with a nice limit down move. And as they started firing on all cylinders there, we did see a breach of this trend line and a close down there below that 50-day moving average, which is not a good look here for the bulls at the moment. The only thing the bulls really have going for them right now is we still are trading above these prior month lows here from 230 to 231.75. Throughout the month of September, we continue to see good demand down here in the low 230s as they offered support right around that 230 line. We'll have to wait and see how this market responds as we move into the new week in this area. However, I encourage everyone to bring a defensive approach and use caution as we move into week 43, as this market has seen a nice uptick in volatility, and the selling pressure we saw here to finish out the week is not something you want to step in front of. I encourage everyone to use caution here and let the big guys kind of sort this thing out. Let the institutions and the big guys try and find a level here to trade around. We expect to see this volatility continue. Offers down here below Friday's low at 233.92 will have the selling pressure continue, and we'll see the sellers trying to attack these prior month lows down here from 230 to 231.75. We want to see how the response is here, so we want to encourage everyone to kind of be cautious here as we move into the next week and let this market kind of sort itself out, see if we can see it kind of balance out and find some decent lines of support to trade around. But in the meantime, we're going to maintain a neutral bias while we wait and see what the early part of this week has to offer. We should see the bulls try and defend this line, but if we do see the bears just try and cut right down through here, we could see it kind of the selling pressure start to increase and start to spill down here into the 220s. And that's something that we could see a potential trend direction change, but we'll just have to wait and see how this market responds as we're trading down here below 230 and 235. At the moment, as we head into the new week, 236.5 has been a key level over the last couple of months, and just happens to be lining up perfectly here with our 50-day average. Bulls need to get a close back here above the 50 to have a chance at resuming this uptrend. So in the meantime, we have seen a lot of action trading down here over the last couple of months between 230 and 240. Look for this market to continue to see some wide ranges of volatility while it sorts out some of this recent news. Next up, we got our November feeders on the board. Similar action, however, the feeders were definitely the weakest of the two markets here between the fats and the feeders. We did see a pretty steady selling pressure all week long, getting down below that Friday's low there on Monday. Briefly balancing out here throughout Monday and Tuesday, but Wednesday through Friday's action just really pushing, seeing multiple limit down moves here last week as this feeder market sold off nearly $32 off of those prior all-time highs down here with a close down there below that 50. Like the live cattle market, we encourage everyone to use a cautious and defensive approach as we move into the next week. The bulls need to recapture and reclaim this 50-day moving average and a close above prior Friday's low up there, prior Friday's high at 356.42 is what the bulls will need to get this market back on track. But in the meantime, we encourage everyone to remain cautious and have a neutral bias here as we move into the next week. We have seen some pretty wide ranges here in this market as we've seen an uptick in volatility. We want to see the big guys and the institutions try and balance this market out and find some support. We've got some pretty wide ranges all the way down here from 335 to last week's low at 348. Anywhere down through here, we could see some support from the bulls, but this is just a pretty sloppy area where we'll see some wide ranges and more volatility, so not something you want to be stepping in front of. We want to see how this market responds once we get down into here, see if we can get some sort of pushback by the bulls before we can resume any sort of uptrend. But in the meantime, we will remain neutral. We will keep a neutral bias on this market and let it sort itself out here. They do have some pretty big wide ranges here, so that's a lot of risk to take on. Let's wait and see this market try and find some support and draw some lines to trade around before we get involved to either side here. So as far as this cattle market goes, we did have a pretty nice uptrend that was rolling at the moment, just as long as this beef prices and everything is a talking point. We'll have to wait and see how the market responds to it, and we just encourage everyone to be cautious and defensive here while this market sorts out this recent news. Next up, we got our December corn futures on the board. We did have a slow drift higher last week as this market started the week here in the middle of the range and slowly made a push up here towards 430. Thursday put in the high of the week up there at 428.5, as we did see Friday's action just settle right back down here towards 424 in the middle of this range. This market continues to just see sloppy, choppy action here. Not a whole lot of directional bias at the moment. We expect to see this 410 to 430 range continue to trade here, as this is a pretty comfortable and sticky price for corn at the moment. Look for this range-bound action to continue until we can get a clear and a close beyond either one of these edges. Next up, crude oil prices saw a pretty nice relief rally last week. We did see this market opening up down here in the mid-50s and showing a good bounce here off of that 56 level early in the week. Friday and Monday session both showing these nice long wicks, showing a good buying pressure down here in the mid-50s, kind of like we saw back throughout the months of April and May. This continues to be a good spot for demand, and we saw a pretty quick snap out of here like we did back in April and May as well, rallying right back up into the low 60s. Pretty heavy volume day here on Thursday, which was kind of an eyebrow raiser, but a good fight back here by the bears on Friday, as we did test this prior demand zone where we did see this market break down out of this prior range we were trading in. And so at the moment, we are seeing the bears continue to step in and offer resistance and some selling pressure right around this 50-day moving average. As we head into the next week, we do have a pretty heavy concentration of volume up here at the top end of Thursday's range and throughout Friday's range, with a nice shelf being drawn here right around the 61.20 area. Offers down here below 61.20, which was Friday's low, should have this market kick back into gear and see the selling pressure and this big picture downtrend resume. With this big volume surge we did see here with that relief rally last week, we encourage everyone to lighten the load early if we do see some short positions, as we do see lots of heavy volume buying activity from last week. So that's something to keep an eye on. Be looking for this market to push down here towards 59 before we see responses. It should kind of carve through this low volume area fairly quickly. But with that big breakout we did see last week, we would like to see people be taking profits early, and as we could see this market kind of stay stuck here in this mid 50s to low 60 range. But we do expect to see offers down here below 61.20, get this market rolling back to the downside. Bulls will need to see this thing get back above the 62.92 area, clearing this prior demand zone. And if we do see that, we do see bids up there above 62.92. Expect this prior range from about 67 down to 61 continue to trade. Next up, equity markets continued to show a nice recovery last week. Pretty nice strong push here starting on Monday, rallying up. Brief little shakeout there in the middle of the week, but we did see a nice strong finish as we did see Thursday and Friday's action rallying back up here towards these all-time highs, and finishing the week up there at a new all-time high at 68.25, and the new high up there at 68.41 on this S&P futures contract. This market shaking off this recent volatility and the tariff talk. Nice wide ranges the following week, which as this market sorted itself out, digesting that recent volatility, and then a nice kickback into gear here as we resume this uptrend, rolling into new all-time highs. We expect to see each of our equity indexes continue to push up into new all-time highs. Dow, NASDAQ, all these stocks looking strong and showing some good strength here as we finish the week on a high note. We expect to see this uptrend resume here, as this still remains a very favorable environment for the stock market. Stay long and strong here and look for this market to continue pushing here into the year end. That's all we got for this evening. Thanks everyone for tuning in. We'll have to just keep an eye on this cattle market early this week. Until then, just encourage everyone to remain cautious and defensive. Let's wait and see how this thing battles it out early this week before we get committed to any sort of directional moves. Just want to encourage everyone to use some caution here as we move into the new week. So thanks everyone for tuning in. We'll catch you guys tomorrow night for closing comments.